Hello, everyone. This is my book review of Trading in the Zone by Douglas. So, this book is about the mentality of how to become a trader, how to succeed as a trader. And I think it was really interesting because I knew nothing about the book in the beginning, but then it became very clear. It was very psychologically based. And it actually, I think, is very useful in situations just like trying to understand life and why people behave the way they do in general. Like, just even if you're not even interested in investing. But the one thing about this is it's very targeted towards short term, like extremely short term investors, like scalpers, where you're like, buying, selling within like, 1 hour intervals. So I personally don't really agree with that kind of investing, but I think that the psychological aspects that it covers are extremely useful and helpful, and at least providing a window into why do we act irrationally when things go in different directions, and why do we need to be more objective and realize that the stock market is not there to serve us. It just does what it wants to do, and we're along for the ride, and kind of accepting that uncertainty can help you perform better. So I'm going to read a little bit of my notes here. One of the big things he emphasizes is that good traders come from having a good mindset and a headspace when they're trading. So the good trading results are not coming from having all the information about the market, but it's actually coming from being able to react accordingly to the trades and maintaining your emotions and kind of, regulating them. He describes trading as an inherent paradox, right? Which I really agree with. I think it makes a lot of sense, right? Sometimes you put too much energy into trading can actually decrease your returns. Sometimes thinking too much about trading decreases your returns. Sometimes selling too early decreases your returns. Sometimes selling too late decreases your returns. So there's almost like an infinite number of ways for you to lose money in the market and a very select few ways to actually make money. So I think that's why it's so complicated and difficult, and there's so much noise, and because there's so much variation, it's just like a black hole. And so it's like sometimes very difficult to learn from your mistakes if you don't really have a system, or don't really have an approach, or don't even have the right mindset when you're entering trades. A really interesting point he brought up was how we project our inner insecurities onto the market, which is itself, very passive and objective thing. It doesn't have any emotions. It's not out to get us, right? It's not out to help us either. So the market provides information, has no feelings or care about what our particular outcome is. We can choose to be sad or emotional when we lose, or overjoyed when we make money, and that's something we choose because we project our feelings onto the market. And I really think that this book is a very psychoanalytical approach to trading. It talks a lot about kind of like, people having these desires and these thoughts about like, oh, making money is bad, and that like actually holding them back at a subconscious level. I think that this book really touches on a lot of the stuff that Strangers to Ourselves by Wilson, that the book review I did there, I think it was like probably a month ago, really touches on that idea of the subconscious, unconscious, and how it can control a lot of our actions when we think we're actually in control. It also emphasizes like intuition. If you can develop an informed intuition and act on that, you'll usually do better than otherwise. And it says the key to overcoming your own mental barriers to trading and overcoming the mental defenses your body makes in order to protect yourself from harmful outcomes is really just truly accept and sit with the risk you're exposing yourself. And you need to do it to such an extent that if you lose or win, you become more indifferent and not so emotionally driven. This will allow you to maintain more objectivity that becomes useful in being successful in the trade to the end. You got to accept the consequences of the trade you perform without emotional discomfort or fear, and this will allow you to stop trading in a mindset of 24/7 fear and actually use your brain properly to make money. Another point was that our emotions cause us to interpret certain kinds of information in a positive or negative light depending on our trading position, which can be problematic because this results in us ignoring the negative information that could discount our thesis, right? So if I think everything's going to go up, then any information I see that suggests that it's going to go down, right, I'm going to ignore it because I want to have that self-confirming kind of bias that agrees with me and makes me feel like I'm right. And that can become very dangerous because you need to be open-minded. You need to be able to sit with the idea that, oh, I'm trading one way, but there is a possibility that something else could happen, and I need to be open-minded to that. Yeah, so like I said, right, I personally would not recommend, or I would highly, highly not recommend trying to do day trading or any short-term trades based off of technical analysis solely, right? Or just doing it in general. It's just, I don't agree with that at all. The book has a story about an experienced trader, right, who's getting taught technical analysis by a junior analyst. So you think about like an older guy getting taught by a younger guy. And so the analyst was saying, oh, based on this pattern of this chart right here, this is the lowest price that we can go and it must go up from here, right? So then the experienced trader picks up the phone, right, and tries to prove a point, and he says, okay, sell a bunch of the orders. So he tells the market maker to sell a huge volume of the stock. And then what happens is the stock then goes down below that so-called predicted point, right, and shows that the stock could actually go past that so-called lowest point, and that as a result, any trader could have been the one selling that stock to push it down. So I think this really highlights how technical analysis is a very weak tool at best, in that, like, just because you see patterns, right, doesn't mean that the patterns have to repeat. History, repeats itself, but it repeats itself in different flavors, right? You have general trends that occur, but the trends, the exact execution and how things play out of the trends are very different, right? You could say there's a bubble now, there's a bubble back when the dot-com boom happened, but like, was there a Middle East conflict at the same time? Maybe not, right? Was there this kind of president we have at the same time? Maybe not. So those things are all like different flavors that add into the mix, and that's why you're not going to have an exact replica of what happens, right? It's going to be similar, but it's not going to be exactly like the same. And so you need to understand that, and that's the problem, I think, with technical analysis. Is you think, oh, because I see this pattern, it must react in the same way. Well, no, because like if your pattern says it has to like go up, and then all of a sudden some crazy news comes out, that's going to change it, right? The market's not like most of the time, right? Sometimes the market doesn't react to news, but like the point is, you can't get so tunnel vision on this idea of like technical analysis being, the gold standard for everything, right? It's a tool, right? It's a tool I don't really use, but it's a tool that like, you can reference, but you never want to be in a situation where you're just solely relying, I think, on one thing and you're not opening your mind to other possibilities or other pieces of information. Yeah, so a good point here in this book is every moment in the market is unique, and the market has no obligation to repeat any specific historical pattern just because you think it will. You must recognize that you'll try to do your best to limit risk, but in reality, there will always be a chance that a trade could lose money. You have to learn to accept that. The book talks about the root of our beliefs and how they're formed and how we need to question where they came from. Like I said before, this book is very psychology centered, and I think it has very broad implications beyond just becoming a better trader, but just becoming a more intentional and aware person in life. I think it also has like a kind of human nature aspect, but more like self-centered reflection on why do you believe certain things. And a good, useful rule of thumb for profit taking is to cut your position into thirds and then gradually take profits on a third as your position increases in value at certain like kind of cutoff points. So I think that was pretty much all I got away from this book. I think it was very useful in a different sense of like, it's not teaching you any secret, but it's highlighting the fact that you don't understand enough about yourself. And this applies to trading because trading is so complicated. It's one of the most difficult things you can try to, endeavor on. And as a result, if you don't even know yourself, right, how do you expect to succeed in such a difficult thing where any hint of you being subjective or trying to change your beliefs and clouding the information is going to cause you to fail, right? You have to be brutally objective. And I think that's something that we can all work on improving, and also just work on improving in other aspects of our life. And that if we lie to ourselves less, we can try to make improvements and, better ourselves and just keep moving forward with our progress. If you have any questions, put them down below. Otherwise, I'll see you in the next one.